My name is Yuri Bishko. Today we will start our webinar about key levels in trading and how to build is it as a pro or like a pro. Write into the chat if you hear me correctly, if everything okay with sound, voice, video. Write that everything okay. After that, I understand that we can start. Friends, write into the chat your name, where you're from, and about voice. Is everything good? Okay. It's important to see that everything okay. Yes, Ivan, hello, but we will speak in English today. If you write please into the chat, do you speak English or do you understand English? Because and also write where you're from because I'm from Kiev, Ukraine, and friends, write into the chat about voice. I hear you loud and clear. Good, good. Reza, nice to see you here. Okay, Yoji, hello. Ivan, yes, good to see it, good to read it. Okay, friends, few things about me. My name is Yuri Bishko. I'm from Ukraine, Kiev, in trading since 2013. It's more than 6 years already. And also, I worked 1 year in a fixed broker in retention department. I saw a lot of stuff which most of the traders do and why they lose money and who make money and all that stuff. In my portfolio was 1,172 traders, and I saw I saw a lot of stuff. Also, also for some investors I provide real statistics that I am a real trader, and I show my one of account which I manage for my investor. Few seconds. It's a real statistic, as you see. Deposit 55,000, profit loss 81,000. It's in 2 years. It's a low risk approach strategy in on this account, and also I studied, made a lot of upgrades according to this system. Okay, let's go. Let's go and let's start. Hello from Latvia. Okay, Lucas. Yes, Lucas. Hello. Nice to see you here. Okay, friends, write into the chat. Is everything okay? Can we start? Do you want to hear about key levels and why you should use it in your trading? Write into the chat that Yuri, yes, I want to know. Okay, let's start. Go on. Just go. Write something into the chat. I need to see that you are here with me. Nice to see you. Nice to see you here. Good. Hey man, how are you doing? How you doing? I'm good. Andrea, I'm good. I'm starting this webinar to show you key levels in trading. Yes, I'm here. Great to see you here. Okay, let's start our webinar about key levels in trading. First, I want to explain you why I use key levels in trading because it is really important stuff. Now you should listen everything carefully and loud. I will speak more loudly because it will be simple things, but that simple things can save you thousands of USD and a years in your trading when you will start pay attention on these things. First, why I use key levels in trading. For example, I want to show you one of key level. I will after that I will show you some other key levels, but first friends, first reason why I use key levels in trading. First, I know what is my stop loss because mostly I trade fake broke of these key levels. In the future, I will do a webinar especially for that trading strategy, fake breakout, especially for that. Today we will speak only about how to build key levels. Uh, According to key levels, I know what is my exactly stop loss, what is my risk, and according to that, I can count my potential reward. What does it mean? For example, here, price near key level, yes, and when I set stop loss above tail of the above tail, few seconds, because it looks like 60 pips. No, it's too much. 60 pips. A few seconds. Few seconds. Yes, it must be 40 pips. Okay, friends. As you see, near key level, we have low predictable stop loss. We know exactly our risk. That's why you can sleep calmly. Many of traders lose their accounts because they too greed and they do not know where to set stop losses. When you have such strategy, first you count your risk, and for example, if you have good risk management, you can set 1% of your capital per position, and after that you sleep calmly. Because I started sleep calmly when I started working with good risk management. What does it mean? Less than 1% per one position. According to this system, I easily can count my potential risk. Also, using key levels, it's easy for me to predict potential profit because mostly price moves from one key level to another key level. Third, big players hunt for volume and hunt for liquidity. That's why they very often move instruments from one key level to another because above or under key level, many traders set their stop losses. And when big players came into that area, they accumulate enough volume. And volume for players, it's a fuel. And only using that fuel, they can move instrument into their direction. Yes. Yes, hello from India, Rohan. Hello, friends. Right, please. Is it clear about reasons why I use key levels in my trading? And the fourth, the fourth reason about it, when you use key level in trading, you don't need to pay a lot of attention on news because ask yourself, what will use big players in their trading? Volumes or some news which they already know. For example, when we open economical calendar, let's do it. Do you think that guys who sits in JP Morgan on some other big companies who control, who move instruments, who move the price, do you think they don't know what information will release? Do you think they don't access to that information? They already know it and they don't use it. What really they need? They need volume to accumulate position and move instrument because in trading it's like in physics. Energy do not come anywhere and do not came from anywhere. It transformed the same money. It cannot came from anywhere. It transformed from one person to another person. The same, trading physics really works in trading and you need to know it. It's a fundamental rule. It's keystones in trading. When you will realize it, not only know, when you will realize it, it will save you years and thousands of USD. Because if I would know it when I started my trading career, I could save 3 years at least 3 years. I don't know where I would be if I would know it when I was a fresher. Mm, good. Also, right place, is it interesting for you? Is information good? If something changing, just write it into the chat because it's really important for me to see feedback from you. And also push like and subscribe on my YouTube channel. Okay, that's the reasons why I use key levels. That's why you can use it also because when you will use key levels, you will have low predictable stop loss, potential profit in few times bigger. For example, if you have potential profit like here in 9 times bigger, you can have only 30% of profit entries and you still make money in trading. you're still profitable. You don't need to hunt for 100% accuracy, which mostly blow out accounts. You can trade calmly and wait for your situations. It's all. Put into risk 1% and get 9%. Friends, it's really awesome. And also, you go with big players because this system built on big players' behavior because they need to accumulate volume. They can do it only near key levels. My personal risk is half of percent. Using volume, you can make 300 points as half of percent. It depends what your account size. You can use, if you trade currencies, you can use website on this broker. It's free ad for that broker. I don't trade using this broker. You can use this trading calculator and count how to set proper risk. Take it here for free. Okay, okay. Let's start about type of key levels and how we can build it. Uh, first, uh, first is break point trend. It is really important stuff. It's really one of the most important places on the chart. It's places from which price bounced or broke it. Let's open my MT4 platform because I love to trade from MT4, and also I use TradingView for analysis and all together. Okay, I need to see, is it okay? Good. MT4, you can see my MT4. Let's open breakpoint of the trend. Okay, let's, for example, like this. Let's delete everything. What is breakpoint of the trend? It's like this level. Take a look and I will explain you everything. Gemini. Few seconds, friends, few seconds. Like this. Why it is a breakpoint of the trend? We had up move. Few seconds. I got it to open here. It's better to open here because here I can use better tools to draw it. But I really, for me, it really easier to trade on MT4. Okay, first, for example, break point of the trend. What is it? We had a trend and price made a powerful pullback, powerful move down. For example, like here, because take a look, every low become higher, higher, higher. As you see, every low become higher. We had really powerful trend. But from this point, price made this real low. And after that, still came up. And take a look here. Here was a good mirror level above this high because many traders, many sellers who open sell here set their stop losses above this high, and price hit it, broke it, and took their volume to move instruments again ahead. Also, another example of break point of the trend. Take a look here. The same stuff. We have good trend and price made a powerful pullback from this point, and after that continue up move. After that, take a look here. What happened? Price came back and made this really good up move. Take a look. Second time when price hit it, take a look on this up move. You need to know that market really respects such levels, and just imagine when you open position here, your stop loss is really low, but potential profit, take a look how many times you can make sometimes mistake, and it will be okay. Will be no problems with that. Okay, okay, friends, right, please. Is it clear about point of trend? No, Do you trade every analysis which you post on TradingView? No, I do not, because sometimes I post video and I wrote that it's technical analysis. Also, sometimes I write the trading plan. What does it mean, trading plan? I wait for confirmation. I write, for example, I will open entry if the price will do fake broke of some key level, and after that I wait. That doesn't matter. It doesn't mean that I post on TradingView and already know everything about trading, or you need to see some other examples. Friends, yes. What do you mean? What do you mean about trading strategy? Uh, Surprisingly easy to understand. Yes, it's it's really easy to understand because you need to find such clear places on the chart. Friends, you don't need to trade everything. You need to find a really clear places on a chart and trade from them. Always use bigger time frame, daily or something like that, because only such time frames will help you to trade best setups. Okay. Okay. Let's go ahead. Breakpoint of the trend. Also take a look here. Breakpoint of the trend. Another example. Because mostly when price came out from point of the trend, mostly after that we will find a mirror level. I want you to explain how to trade, because take a look. It is break point of the trend. What does it mean? Price stopped all this up move from this candle, and count how many daily candles the price was inside one this daily candle. It's a signal of huge accumulation. And after that, we saw how the price broke up and closed the ball. Take a look here. After this, price made a fake broke and continue up move on for how many? 300, nearly 300 pips. With stop loss nearly 30 pips. It's risk reward 1 to 10. It's also example of breakpoint of the trend, because price was in this powerful up move, and from this point price stopped it and was so many days in this range. It's really powerful, it's really so powerful places in a chart. Okay, good. Thanks. Are you using some sort of indicators which helps you? Yes, I'm using my mind to which helps me. Maybe he using moving energy and volume Fibonacci. You don't need it because big players move instruments from key level to another key level, from places where they accumulate volume, when they accumulate position. Okay, let's go ahead. Also, another stuff, non-standard candles, paranormal candles. How you can use it, paranormal candles in your trading. Also, the same example here on gold. Take a look here. When price made this powerful up move, it's really important that paranormal candle. What is paranormal candle? It is more than ATR, average daily move. This candle in 2-3 times bigger than average daily move last 5-7 candles. For example, last 5-7 candles, it's nearly 100 pips points average move. But here, price made 240 up move. That's why it's paranormal candle, and above and under we set key levels, and take a look how the price reacted on it. When price come back again to this key level, take a look what we had. There was an entry with really low risk and potential reward. How many? In 400 pips, 400 pips more. It's a paranormal candle, non-standard candle. It's this example is the best example because price started up move from that and after that made a pullback. It's the best example how you can trade paranormal candles. Right, please, is it clear? Yuri, can you set this info on a PDF file? What do you mean? This this presentation? What do you mean to set? What exactly? Okay, let's go. Let's continue. Uh, and also, let's speak about three types of key levels which I use in my trading. First, it is historical, and first it's historical. It's one of the best levels which you can use in your trading because it is levels from which instrument the price can change its direction really definitely for a week, for a month, for even for years. For example, like here, like take a look for example of historical level. Price was here. Take a look how many month price was here. We can see this level on weekly chart and take a look what happened when the price first time came into this area. This accumulation of volume and after that 200, 300 up rise. Also, another example of historical level. Take a look here. When price first time came to this historical level, 1, 2, 3, 4 month. 4 month price wasn't here. After that, 300, 400, 500 pips move. The best to find such key levels on, as I said, on higher time frames. You need to use daily, weekly, something like that. As bigger time frame you use, is better for you. Okay, let's find some other key levels, really powerful historical levels. Okay, take a look here already. Yes, price near this 1 week, 1 month low. It's also example of one historical level. From this point, price can make good up move. Best example of historical level of really powerful levels, I can show you here on British pound, as I speak before. As I speak before. Near these levels you can open entry and you need to understand if you will be right your potential profit will be in many times more because only because near such levels you can open a position and hold it for a long term. It's the best places because most of the traders try to open position and hold it for a long term, but places on a chart could not be really good for it. um, It's it's my personal. I can send you because all these pictures I made with my designer, and it took a lot of money and energy to create them. Uh, I think this webinar where I show you how to build it, it's enough for free. Do you consider yourself as a long-term trader? Yes, mostly I trade swing entries. On which pair should we trade? Sometimes we get a lot of signals. If you trade on daily charts using big time frames, you can trade all instruments. I trade what I trade. Take a look. I trade indexes. I trade oil. I trade major currency pairs, minor currency pairs. It's more than city instruments, even the city five. and because really nice picture. I see really only two, three nice picture per week, not more. Really, really, really good picture. Okay, okay, let's go ahead. Uh, Good, good for you. As big a time frame you use, as more clear entries you will have, but there will be less entries. Okay, friends, let's continue about me about historical level. Once more, what is historical level? It is a place where price wasn't really a lot of time. For example, uh, one more example. Like, take a look, like here. What you need to do, you need to open a chart, your trading platform, and only one thing which you need to do is to look is to searching for some key places on the chart, like here. Take a look. Price was here 6 December 17 year, and after that came back to that level 10 May. You can count how many month, it's half year approximately, or even more. A lot of people set their stop losses under this level, and take a look on this beautiful fake broke. And after that, price made 400 pips up move. If you if you set stop loss 30 pips, easily, and just hold one position. Okay, another example of historical level. Always remember, as bigger, as longer picture you will take, it will be far more better for you. Take a look here. Take a look on this example. And also take a look how many days price was near this level. Fake broke, daily candle close under it, stop loss maybe 20 or 30 pips, and after that Australian dollar made this 700 pips down move. And swaps also was positive in this down move. That's why you should looking for such stuff. Once more about historical levels, how you can build it. You need to find key places on the chart from which price started new move. For example, like here, like from this point. Here we had up move. After that price, it's break point of trend. After that price made 600 pips move, point down move, and after that came back. It's a really good place to open a position because big players accumulate enough volume. Friends, do you mean intraday trading inside to trade inside? What time frames do you recommend for day trading? Clarify, is it about inside? Friends, write please into the chat. Is it clear about historical levels, breakpoint of the trend? Is it clear with these examples? Also push like if you enjoy this video, and follow me and subscribe me on YouTube. Guys, come on, write please. Don't scare, don't shame. Right, is it clear? I need to see that everything okay, because only in that case we can continue. uh, what do you mean by trading strategy? I recommend, if it's day trading, always you need to see where the price on daily chart, and where the price on lower time frames. Because if you will take a look on my, for example, if my working display. Take a look when I trade indexes. I always pay attention where is the price on daily chart and also use lower time frame to make a good entry, accurate entry. That's why you need to do the same. Really good to buy a big monitor which will show you different time frames. For example, weekly, daily, 1 hour and 15 minutes if you trade intraday, because you need to see a whole picture of instrument. Guys, guys, only Lucas wrote that it's everything okay and understandable. Guys, right? Is it clear? Can I go to another type of key level? Really powerful level which I trade the most. You need for intraday you need to use different time frames. As I said, the best is when you have, what is the best when you have your monitor, and for example here you have weekly chart, weekly, here you have daily, here you have your time frame where you open a position, for example M15, and here you have 1 hour. You need, and better to use really big screen because you need to see a whole picture what instrument do. It's the best for intraday for for all type of trading. uh, Good, good, good. Let's continue, let's go on. Okay, now let's speak, friends, about mirror levels. Mostly I trade mirror levels because mirror levels I can use also in intraday trading, in mid-term trading, in some swing trading, and also I love this type of entries. What is mirror levels? Also about mirror levels, I wrote here. I want to show you an example on my trading view. There must be today about educational setting follows script first educational post. Okay, uh, I will find this first my educational post and will show you. Take a look here. It must be nearly here. Where is it? Where is it? Where is it? So yes, it's close. Yes, here. If you didn't read it, it's really important to read it. You about mirror levels. Mirror levels, it's a place where resistance become a support become a resistance. Uh, it's really best places where we can open entries because mirror levels is the same like historical level, but they came out far more often in trading, and they also gave to us accurate entries with low stop loss and good potential reward. For example, like here I show you an example. In trading for you, it's important to find best places where you can open entry with low risk. Take a look on this example on Euro USD. As I said, take a look how many times price bounced from this level. You need to find such key places and take a look on this. First time price bounced down, after that bounced up and made this bull trap. After that, another mirror level. And when we open entry near mirror level, it's 4 hour candle. Guys, it's really enough time to open entry here. And our potential risk is 70, 20 pips, potential profit in 10 times bigger. It's really awesome. And you have protection because when big players made a mirror level, what does it mean? They took volume. They took enough volume from guys who go in another side. For example, a lot of people thought the price will start up move here because price broke up the key level and bounced it from this resistor, from this support. But in the end, price moved down, and all guys who opened buy position here were stopped. When people stop it in buy position, it means they give volume for those who want to move instrument down. and that's why I love to trade mirror levels. It's maybe one of the most favorable place patterns which I trade. Also, example on a gold, which I showed to you. Take a look. We had this powerful range from which price started this range, and after that, price broke up. And take a look. Price made a fake broke, and after that, 400 pips more. Nearly such places you can open entry with low risk. The same, take a look. The same here on S&P 500. Take a look. Up move, up move. After that, price made this down move, and a lot of people thought that S&P will start powerful down move, but that didn't happen. Also, I also thought here that price will drop down because daily candle closed under this up candle. But in the end, price closed above and nearly and made a fake broke on this daily candle. Take a look. And here, stop loss was only 40 pips. Stop loss for indexes was 40 pips, friends, for indexes. Risk reward in this situation was 1 to 14, 1 to 20. Just imagine you put into risk 1% and how much you can take. Let's open another example. The same stuff, take a look here on oil. What is resistance? Take a look, resistance. Price bounced several times from this level, and after that, broke it up, close the ball. And nearly this level, we can open a position. Take a look, risk reward 1 to 19. Can you imagine what is risk reward 1 to 19? Also, Bitcoin, the same stuff. Resistant, price bounced several times. Friends, I'm showing to you a mirror levels because I want you to understand that there some strategy which you can use and they are good because here you have here you can make some mistakes and everything will be okay. You will not need to pay a lot for that because most of the traders try to trade only 100% accuracy, but it doesn't exist in real trading. Take a look at another example of mirror level. Write please into the chat if is it good at this moment? Is it did you get what I mean about mirror levels and historical levels? Friends, write into the chat. Yuri, yes, I got it. Good and nice. Friends, good, good. Good. Love to see it. Love to read it. Yes, it's good. Let's continue because we need to finish so soon. Once more about mirror levels. Take a look on this mirror level on indexes. Take a look. Price bounced 2 times from this level, and after that came back. I really love when price bounced 2 times, and after that came back. It's the best mirror level. And take a look. And here, if we open entry with 40 pips risk, we can take 200, 100, 300 pips down more. It's 1 to 8 risk reward or even more. And take a look when price came back, how the price reacted on this mirror level. Take a look. For what was here? For start, we had a support. After that, that support become a resistance, and after that again, that resistance become a support. You need to trade the same stuff in. You need to find the same stuff in trading. Another example for you on indexes. Take a look here. It's not clear like on previous, but it's the same. Take a look on this mirror level. We had a resistance, and after that, that resistance became a support. Another example, friends, 40. Another example for you. I want to show you really the best examples. Also, some example you can find here. Take a look how many times price bounced from this level. After that, just came back and continue that up move. Sometimes it's really important to see daily candles how it works because take a look. We had up move. After that, price made a pullback. Okay, friends, once more, if you will want to use mirror levels, it's important to read this file on TradingView. It's really important to you to read it again many times because there I wrote examples of mirror levels and here explain it. It's really one of the best levels which I use in my trading. Okay, once more, is it clear about historical and mirror levels? Can we go to the third type of levels? And because so soon we will need to finish. Guys, okay, guys. Okay, and also another type of key level, it's a limit level. What is a limit level? It is, it's a place from which price bounces several times. For example, it's really very often we can find it on oil, especially on oil, especially here with price drop at this powerful down drop. What we are looking for? We are looking for a place from which price bounced several times, several candles bounced in a row, and after that just open entry. Best to trade limit levels to continue the trend. For example, here we have downtrend, and here we have price bounced from one level many times. Here we have one, two, three, four candles in a row. Here we have one, two, three, four candles in a row. It's the best places for how you can trade limit levels. Many candles in a row bounced from one key level. Another example where it was not so many days ago. It was not so many days ago. Let's take a look. Let's find it. Like here, like this example. Take a look. Many candles in a row bounced. Take a look. How many candles bounced from one level? You can use also this type of levels for intraday trading. Take a look. How many candles bounced from such level? You need to find such places and you will be a golden trader. Okay, friends, write into the chat. Is it good? Did you understand what I meant about these key levels in trading which I use? Also, don't forget that so soon I will do another webinar. Take a look. I want to show you my schedule. I will do another webinar about how to trade this key levels the best because this next webinar about fake breakout, it will be continue of this webinar. I will send to you a link. You can set a remind. This will be a webinar about fake broke and how I trade it. It will show you best entries where your risk reward will be 1 to 10, 1 to 5, 1 to 7. It will be really awesome. I took really a lot of money for such knowledge, but now I'm sharing it for free for you. Friends, is it clear? Lucas, good see, good, Lucas. Great, great, and awesome. Also, friends, if some of you are interested in my education, if you really want to find a mentor who show real statement, real proof of my trading, who trade on real account, who can show you how to trade properly, you can write to me. You can write to me using these contacts. First lesson for free because I know that many of you have different experience. And first we discuss how I can help you, and after that we improve you. If you're interested in personal education, just write to me using this context. And also, friends, push like, subscribe on my YouTube channel, and don't forget to be on the next webinar. Thank you for your time. Bye.